Hello and welcome to Pro Traders Market Commentary for Tuesday, April the 19th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data coming out today, other than we had building permits came in at 1.09 million pulled versus 1.2 million expected. Housing starts came in right in line with that, with 1.09 million starts versus 1.17 that was expected. So lower than expected on the housing front there. On to basically crude oil for that matter. We are actually trading higher than we were before this whole talks over in the Middle East about turning off the spigot for oil, and it's pushing higher basically on this Kuwaiti employee strike in the oil field. So that's only accounting for 2 million barrels of oil, but the overall market is looking at that as pretty bullish on the supply side. Bullish for prices because of lack of supply, I should say. NASDAQ, as you can see here, we were up in positive territory in the morning, but have slowly started drifting off into negative territory, very close to the lows of the day, coming right back to that value area I talked so much about. We're down over 30 points right now in the NASDAQ /NQ. Onto the E-mini S&Ps /ES, still above water, just trying to stay above water at this point, up 1 point on the day. NASDAQ obviously leading its way to the downside, hanging out right there at the value area or the point of control. Onto the E-mini S&Ps, as you can see, just recently made new lows, went into negative territory for a short time, but now we're pushing back higher. It came to this value area high and have bounced off of that at this point anyway. On to a couple of other things, a couple of trades that I'm looking at. Intel has earnings coming out. Not a whole lot of implied volatility though for having earnings, and we're seeing that on both YHOO and Intel. Usually we get a little bit higher volatility for these binary events, if you will, and don't know if I'm going to enter any trades in Intel just because there's the market maker move is only about $1 something in there, so it's pretty tight range for Intel. Same with YHOO. I mean, YHOO's volatility is really being created on a possible buyout, and everybody's kind of forgotten about these earnings that are supposed to come out. And as you can see, the whole volatility has just started slumping going into this event. Usually you see that start to ramp up rather than to really come off, or at least go sideways heading into that event. So there's not a lot of premium in those options cycles either. So might stay away from any earnings event today. On to a couple of trades that I've done. Netflix had on this for the earnings trade, and I did a strangle yesterday late in the afternoon. Had on the April with only a few days to go. Friday they go as an expiration, so that was trying to capture that volatility and theta contraction in there and really see that come out of those premiums. As you can see, we got the vol crush happening. And in Intel, I had on the April 123.93 strangle in there. So the 93 puts I was short, and short the 123 puts. So stayed right in line with that. It actually moved outside the market maker move. If you remember me talking about this, market maker move was expecting about $10.50. I covered it right on the open, about 10 minutes, 15 minutes after the open there. So my 93s weren't really ever even tested, and still got a lot of contraction with that. I ended up collecting $2.12 for that yesterday and bought it back for 62 cents this morning. So that was a nice little winner for the Intel. On to IBM. IBM, we did this as an earnings calendar setup, and if you remember, we did this several weeks ago, and originally I had on the April 4 weeklies, and I sold the 145 puts and did that as a calendar. So in the April monthlies, I bought the 145 puts. So I used the April weeklies to help finance that long put in the longer duration that had this binary event in it. So I ended up paying a total of $1.38 for that. In a sense, I paid $1.34, but then I paid 3 cents to get back my April 4 weekly 145 puts. So brought up my cost basis by a little bit, so actually about 137-ish, and ended up getting out of those long puts for $1.42. Now, if you haven't taken those off yet, we are much lower than when I did it. I did what was trading about 144.50, and now it's another dollar or so lower than that. So better time to take it off if you had waited. So I followed my rules on that and covered those early in the morning, just so that you played it for the event, and then in the morning, that's kind of usually where I take those off. So you can find out more about those earnings trades at protraderstrategies.com. This week, we're going to be doing it on the strangles. It's not going to be around earnings, but it is going to be on strangles, and a lot of the rules kind of cross-correlate in a sense. So check that out. You can go to protraderstrategies.com, sign up for that, and that's all I got for you today, other than if you can't take that, take it easy.